Let's give you the markets update now. The JSE looking set to open to a positive session this morning with global markets welcoming some solid earnings. These are reports out of the US, which has helped soothe concerns over the supply chain disruptions and inflation. Independent analyst Jimmy Moyaha joins us now to talk us through the latest market moves. Jimmy, good morning to you. How are the markets doing in early trade?
Morning, Toli. Markets have opened slightly firmer. We have seen the top 40 open about 0.1% firmer. We've seen Naspers and Process trading higher this morning. We've seen City Lodge trading higher this morning. So we are looking at a slightly more positive open this morning than we did see yesterday. The Rand has opened and is holding above that 14 Rand 50 level. We'll see if it is able to break below that level and sustain below that level. But at the moment, 14.50 is acting as quite a bit of a support for the Rand.
Yeah, the world's biggest pharmaceutical maker, that's Johnson & Johnson, beating analysts' expectations for their third quarter sales. Talk us through their numbers.
Sure. So, Johnson & Johnson reported some positive numbers. They did report, of course, that their revenues did miss some estimated targets, but the miss was around $300 million, which comparatively, if we look at the fact that the revenue did manage to achieve about 27 billion, so the 300 million miss is only a slight miss in the state, but they are citing that is like from the medical devices unit and not necessarily from their pharmaceuticals division. They did report positive growth with regards to their vaccine rollouts and the revenue generated from vaccines. They said that in Q3 alone they generated about $500 million in revenue from the vaccines, but they did also outline that the vaccines are only going to account for about 3% of their top line revenue, so they're not expecting to make much more from them. To date, I think for the 2021 year, they've made about 720 or 760 odd million from them, and they've said that their target for $2.5 billion from the vaccines is still on track, and they're expecting that the approval of the booster shot from the FDA will go a long way in helping this.
Yeah, let's stay with company news. Pick n Pay releasing its half-year results in a recent trading update, and it expected to report sales growth of about 4% to the tune of 46 billion rand for the period. How are they doing?
Sure. So, they reported that the civil unrest that we saw, as well as the lockdown restrictions that we saw earlier in the year, did have a dampener on their numbers. So their revenue numbers were looking good. Their earnings numbers were looking good. Earnings were up about 90%. However, they did note that their gross profit was down about 3.4% and their gross profit margins were down about 18%. And they cited that mainly due to the lockdown restrictions, the civil unrest, and their inability to sort of make those revenues. They say that from the liquor lockdown, they lost about 800 million rand, and from the civil unrest that took place earlier in the year, they lost about 930 million, so just under R1 billion there. But they are also outlining that they're looking to ramp up their expansion into their high-end market with their Pick n Pay Select stores. They've got about 24 Pick n Pay Select stores at the moment. They're looking to add another 16 for this current financial year of theirs. So they're saying that they're hoping that that's going to boost their revenue going forward, and that shift as well is going to align them better to challenge brands like Woolies and brands like Checkers with their Checkers' new Fresh X stores.
Yeah, let's conclude our conversation, Jimmy, with the consumer inflation. This is the data for the month of September. It's due out in the next hour or so. Explain to us why this data is important, and the expectations here are that it has accelerated to about 5% year on year, and I'm already thinking in my head, petrol. It's maybe one of the things that might start troubling me as I go to the petrol station today.
You certainly don't want to know that the petrol price might hit 19 Rand with the next fuel price increase.
Yeah.
But essentially what we're looking at from the CPI figures, it's a representation of the health of the consumer in South Africa. And while we are expecting higher CPI numbers, the concern for me, as you rightly mentioned, is where that increase is coming from. Because if we look at core CPI, which strips out the effect of food and energy prices in there, so it basically strips out the effect of food and the effect that fuel prices would have on there, that we're expecting to remain unchanged. So that we're not seeing an improvement on in that respect. So that's where the concern comes from. I mean, one of the factors that we are looking to see now is, rightly, as we mentioned, the fuel price. The fuel price has been, it went up between about 4.9% between July and August, and year on year for the last 12 months, the fuel price is up about 19.6%. The other thing that we need to look at is the higher cost of food inflation. The food inflation prices haven't increased over the last 3 months, so they've stayed consistent at about 0.2% month on month. But overall, if we look at August, August's figures showed that 6.9% was the increase in food inflation, and that represents the highest increase in food inflation in 4 years since June of 2017. So the cost of food is considerably higher at this point, and the cost of fuel isn't helping that either. So the 6.9 on the food side, the 19% on the fuel side, and that's why I say that when we look at the CPI number that comes out today, even if that number is in line with expectations and we get the 5%, the bigger concern for me is where we're sitting from a core CPI perspective, because that's going to be a better representation of the health of the South African consumer.
Jimmy Moyaha, the bearer of bad news, thank you very much for your time, sir. He is an independent markets analyst.